Rick here, Hit and Run Candlesticks, and today's date is it's Thursday, September 24th, 2020. I want to reach out and say a great big thank you for watching our video blog here in the morning. Also, if you want to leave messages or leave notes in YouTube here and want to ask a question, please do so. And I will try to answer those questions on the next one or two videos after that. Sometimes some questions just can't be answered via typing, but you can certainly ask the question. I've got a couple here I'd like to answer. I had somebody ask me in the YouTube notes there if the live trading alert scanner can be used for day trading. And absolutely it can. Absolutely it can. There's the scanner is set up so you can look at 1 minute, 2 minute, 5 minute, intraday. You can get intraday alerts, intraday candle action, intraday chart patterns. So you can absolutely use it for day trading. Let's see, there was one more question here. Oh, here it is. Mike had asked, let's see, he says, thanks for the market prep. You're very welcome, Mike. Let's see, he's wondering, when I place an option trade, do you generally make directional trades? Yes, that's actually all I do, is simple calls and puts, directional trades. I don't do anything fancy. All I do is simple directional trades. So really what I'm doing is I'm trading the chart like I would a stock, but I'm using options to leverage my money. I'm a firm believer that if you can't trade the chart and the stock, then trading an option is not going to help you. It just might make you lose money faster. But if you can read the chart, if you can read direction and trade direction, then trading the options, the directional, just the directional option, and if you're able to leverage your money, then it becomes very lucrative, and you don't have to have near as much money at risk at any one time. So yes, sir, Mike. All I do is trade simple directional calls and puts. So longs and shorts is what it amounts to. All right, let's take a look at the market here. Yesterday, the SPY opened up and ended up down for the day. In fact, a great big bearish engulf. Great big bearish engulf here, almost engulfing the entire previous 2 days, and definitely engulfing the previous bodies right in here. You can see our T line, that's the black line. It's the T line. That's the 8 exponential moving average. And anytime we're under that, I'm generally not bullish. Now, I may not be short under that, but generally not bullish. We are under the trend indicator, and that's the red dots right here, and we are under this blue moving average here, which is the 50-day simple moving average. Right now, it is my opinion that we are in a downtrend, and until that changes, you want to be careful about the longs you take. Now, I'm not saying you can't take some longs. I even took one yesterday. I took a long yesterday, and we'll talk about that. But you really want to be careful taking those longs because the market is not in your favor. Right now, the market is in favor of more downside. We've got the 200 period moving average right here, sitting at 310 and a quarter. So I think I said a few days ago that I am looking for us to move back down to the 200 before we get real bullish, on a breakout. Now we certainly might see a relief rally in here. That absolutely may happen, just like we did right here. But overall, I think we end up dancing around until we get to that 200, and we could go lower too from here. We'll reevaluate at that level, and we'll be reevaluating every day in this market. There's a lot of turmoil out there in the public right now. Whether it's in the public or on Wall Street, doesn't matter. There's a lot of turmoil right now, and until the election is over, I suspect that turmoil will hang around. So trading could be a little interesting for sure. We want to be very careful with our trades, and put as many probabilities in your favor as possible before you make a trade. I call those conditions. So you want as many conditions in your favor before you trade. And maybe in the next video I'll talk about some of the conditions I look for. Maybe we'll do that in tomorrow's video. Okay, so let's take a look. I want to look at the Qs today as well. So you can see the Qs, nasty candle yesterday, just continuing that downtrend. We're below the 50-day simple moving average, and we're below the trend indicator here. I believe, again, there's still a real probability that we get further to the south side here, maybe even down to that 200 period moving average before we actually break out and make a run higher here before we do that. So we really want to be careful here on this chart. FNGU, it's trying. The big tech is trying. It is really, really trying to hold us up here. I'm just not sure I'm feeling it. Now, of course, if we do break out to the upside, then there is a possibility that this big tech can drive us back up, just like it did all through here. But we need to really keep our eyes on that. We start to see a breakdown, and let's move this over like that. There we go. If we start seeing a breakdown below this 151.85 area, these lows right in here, there is a super real possibility we get down to that 200 period. Now I'm also going to put up I have another 200 period moving average that I use, and this is actually what we call the dotted deuce. It's the 200, but it's a front weighted, and it's the average of the low. So you can see it's a 200 period moving average, front weighted average of the low. It's another one I use, and I find it extremely useful on my charts. So we could even just get down to that area right in there, and that you can see how that would be, right at that low. By the time we got down there, this just might be right into that area. And then of course any weakness, you can clearly see how the 200 might be tagged down here with this bit of support here and down to that 200. So we really, really got to be careful here. And then again, hey, all it takes is a nice little breakout, and this market could be turned around in a heartbeat. All right, let's take a look at a few trades. Let's start with BBBY right here. I'm watching this for a possible long. We had a nice breakout day before yesterday on some pretty good volume. Yesterday ended up with a little bearish Hiromi in here, or an inside day. I'm going to wait for the buyers to step in. Let's see. I'm going to go to a 2-day chart. Yeah, right there looks good. So I would think a stop around 170 once it's entered, assuming, let's do this. There we go. Assuming that it's bought inside this box area somewhere. Now, what I want to wait for is the buyers to come in. So if sellers keep hanging around, then I don't want to be a buyer on a seller. I want to be a buyer on a buyer when buyers start coming in. Now, I can see that this is opening up a little higher today, or opening up relatively high. So see, we're sitting here right in this area right now, pre-market, and it's still a couple hours before the market opens up here, around this $14 range. So this might be a nice little buy if, something like that right there. So raise that buy box. Now, if I end up buying it up here, I'm not going to use my stop down here. What I'm going to have to do is pull my stop up a little bit, because I don't want to risk a lot in the market. So there's a little bit on BBBY, another long I might consider. And this is actually an inverse ETF. And if you think the Qs are moving down, this might be a way to trade the Qs. A lot of people, a lot of traders, you just can't afford to trade a $264 stock here. So one way to get around that is to look at the ETFs and the inverse ETFs. And SQQQ is setting up pretty nice. I actually bought this yesterday before I left for the dentist. I had to go to the dentist yesterday, and right before I left for the dentist, I went ahead and bought this. Currently up 9.85% at the close yesterday, and it looks like we're opening up higher. So I'm definitely going to be up 10%, at least at one point this morning. And we start to break out here. That's going to really put us in the money. So this is also a rounded bottom breakout. As far as strategies goes, this is my absolute favorite strategy of all time. Now, you could probably, this is my all-time favorite strategy. I mean, I love trading stocks where they're breaking out, and that's a whole strategy in itself. I absolutely love it. But this is my favorite. This is where I've made more money than on any strategy through here. And I still use, as far as the entry goes, I use, the 3/8 trap. I still use chart patterns, price action, all the same. As far as the entry goes, it's the same whether I'm buying near the bottom here or at the top looking for a breakout. So this seems like it's working. Here, let's get back to it. You can see the trend here. Trend is working up quite nice. You can also see the higher lows and higher highs in here. Low, high, higher low. And we're working for that higher high. And we start to break out. Let's see here. Let's put a line right in there. We may get to 33 pretty quick if the sellers really start to come into the market, and that'll drive this SQQQ right up into that 33 mark. Another chart that I'm looking at is SQ. Now this is a long, and this is going to have to do some work, but it's one I want to keep my eyes on. And let's just draw a line down like that. So we're going to have to break out, and I'll put the buy box in there like that right there. So what we're going to need to see, what I'm going to need to see anyway, is here we have a nice little bottom, and then we rallied up. We made a higher low. So let's put this right here. And now we've got a bullish engulf, and so far we have follow through. I just need to see that follow through move over that trend line, and then what I want is a test. So I want it to come back and test. I want a little bit of a rest in here. It can be sideways to down. It can be a little bit more down. That's fine, long as we stay above this trend line. And then when I start to see buyers step in, that's where I'll start looking for an entry. So this is going to have to prove itself before I place an entry on it. Here's mass. Mass is a short setup. We've got a Oreo cookie type setup, and what that is just the the hard shell Oreo one side over here, and that filling right in here, and then the other side of the Oreo cookie over here. We're below the 50-day period moving average. The T line is now crossing below the 50-day period, and we're underneath the trend indicator here. A little bit of a top showing up that you can clearly see. In a perfect world, what I would like actually is a rally, and then a relief rally, that is, and then some sellers step in and watch this area here to short the stock, and then ultimately over several days move back down toward that 200 period moving average down into here. XRT is also setting up for a bit of a short. You can see we've been in a downtrend. So let's just take this. You can see that clear downtrend here. And then we put in a little doji here, and we gapped up. And that's great. That's great for a relief rally. But then here the sellers come back in. This actually would have been a good buy yesterday. And if I could see an inside day entry today, or just ever so slightly below the low, this might be a nice short play. Once again, heading down toward that 200 period moving average over several days. URI, also a short setup. Now this one has pulled away from the T-line a little bit, and it has pulled away from the 50-day period moving average. So this is another one where a relief rally would be nice. A little bit of a relief rally, have those sellers come back in, and that could be the entry area. Also, I mean, if it doesn't give us a relief rally and maybe it just wants to get bearish right away, we start trading below those lows. That's also a place that may look for that entry, and then head down toward the 200. Last one I have here is NVR. Breaking that 50. By the way, all these that we've looked at where we're below that 50, these are all set up in that blue ice failure trade here. So if somebody's, some of the big traders out there, this might be a chart that you might look at, NVR. And we've got this clear downtrend. We've got a low, a failed high, and we actually have a lower low here. Well, we actually did pull down to a lower low. So we start trading below that 38.48 level. That could get you right down to the 200 period moving average. All right, that's the trade ideas I have for you today that I'll be adding to my watch list. Thank you, everyone, for watching our video blog. Remember, if you have questions, just leave them in the blog comments, and I will try to answer them on the following video. Thank you very, very, very much, and we'll see you in the trading room. Good day to you all.